All right. So what's the first thing you look at when evaluating a potential investment?
I think, of course, my understanding about the business, the management,
Mhm.
and the potential for the next few years.
Best piece of investment advice you've ever received?
Uh, don't be in a hurry. Go slow. Take your time.
A stock you would buy without any hesitation?
I don't think I would hesitate on everything. Knowing me and my behavioral aspect, I would not do that.
All right. In one word, how would you describe the current market environment?
Let me use two words. Very volatile.
Okay. Your favorite sector for long-term growth?
I think financials and healthcare.
All right, then. Welcome, Rohit.
Thank you.
Rohit Singhania is co-head equities at DSP Mutual Fund. And over the next few minutes, me and my colleague Chirag, we'll ask Rohit all about his investment style and fund's performance. So Rohit, first up, given the recent volatility, do you think a sustained recovery in Indian equities is on the horizon? Or is it, or is uncertainty here to stay?
I think looking at the current data points, the news flows globally in India, I think the uncertainty is here to stay for some time
Mhm.
because it's very difficult to predict or project, what kind of actions or reactions various presidents or prime ministers of various countries will do. Every day seems to be a new news flow, right? So my belief is, at least from my side, is not get excited by reading or hearing everything every day new. And it's going to be uncertain over the next few months for sure. Why to add to this is we also entering quarterly numbers time. One large cap in the Nifty 50 name has already announced. We'll have more announcing soon. So again, the view has been, earnings with the predictability has been really difficult for the last 3 or 4 quarters. I think this quarter is not going to be any different. I would say volatility because of uncertainty is going to be the case for the next few months.
Rohit, what according to you will be the key factors which will drive the momentum or which will help the markets going forward?
See, I think today when we look at it, and this is purely on a pure bottom up, right? When you look at so to drive markets, you need bigger sectors to do well, right? So sectors like your financials, energy, IT, materials, they need to do well, right? When we see them today, all of them have some kind of headwinds, like financials in terms of their margins, right? IT in terms of growth, materials and energy in terms of global growth slowdown. So unless these three sectors don't do well, right? I mean, you may have smaller sectors or subsectors, like maybe some NBFCs, some cement names doing well. Unless the whole big chunk doesn't do well, to drive earnings, it becomes difficult. So that's what, when I'm talking to my team of analysts, right? It's not a sectoral approach. We said bottom up, let's look at stocks where, there is some resilience in earnings. Of course, we may go wrong in that. But no point taking an umbrella view and say, okay, I want to buy an IT, pharma, FMCG because this looks good. So I would say, I'm in a camp today that after this quarter also, you'll have one round of downgrades coming in for sure.
How long do you believe that markets will remain this type of uncertain, given the domestic and the international factors? Will it take a 2 or 3 quarters more to come back on track?
Chirag, I believe over the next 2 months, the uncertainty should come down. Why I say so is the first point, right? How does the global leaders behave? I think over the next 2 months, whatever ups and downs we need to see, I think we'll have some clarity, right? In the same time, the quarterly earnings, right? Most of the quarterly earnings will be done by May end. In terms of what the managements are talking in their con call, what are they talking about growth? What signs are we seeing, right? So these two, which today are uncertain, hopefully in the next 45 to 60 days, we should have some clarity, which should bring down the uncertainty and hopefully the volatility also by then. So I think 2 months is a fair time I'm giving right now.
Right, Rohit, can you walk us through the core principles of your investment philosophy and how they shape your stock picks?
I think I keep it very simple. As I told you in the rapid fire round, right? Do you understand the business, Rohit?
Yeah.
Because if you don't understand the business, you will not know why are you entering and why you exiting. So understanding the business. Of course, like any other fund managers and analysts, right? We look at businesses in the past, how they have performed, the cyclicality, how the management has behaved in difficult time, how have they, done good or bad with the minority shareholders. I think that's a common part. We all as investors are supposed to do that, right? For me, what is important is why am I buying a stock today? I'm buying it for the next 2, 3 years business performance. And if I get that right, how the stock price will move and my NAV will grow, right? That's how I'm looking at it. So for me, and I'll give you with an example, right? I mean, when you look at the stock and you say last 5 years was great for the stock, everything went well, they did great, they outgrew their peers, the management is super, right? And the stock price was also doing well. Is that enough for me to buy the stock today? Yes, it is one of the inputs, right? But going forward for the next 2, 3, 4 years, what happened in the last 5 years, whether in that particular sector, industry, or the moat the company was enjoying, can that continue over the next few years? That's very important to understand. Why I'm saying so is, suddenly there was no competition last 4 years. You were just a one or a two player market. You're the biggest player, right? Demand was growing strong. So you benefited out of that also. Going forward, is the competition rising, or is someone launching new products or the demand for that product is coming down? So you have to take that cue also, right? And same thing goes if you were doing bad for last 5 years. That doesn't mean in the next 3, 4 years you're going to do bad, right? If things change, you have to look at it in a different lens. That's the first part. Secondly, what are you paying for? Like I always say, right? You're buying a stock today, you want the price to go up. If you're already paying today for the next 2, 3 years, good performance of the business, is it going to help me? It's good to say I have a good company in my portfolio. But if the stock price is not moving up, is it a good company for my returns? It is not. I think these two aspects, the continuity or the change in the business environment in the last few years versus expectation, and what price are you paying it today? I think that holds the key for me.
Rohit, now, as discussed earlier, you focus on strong fundamentals and the reasonable valuations. How do you find the high growth opportunities while maintaining a margin of safety?
So for me, I think that equation is not a scientific equation, but that's a debate which I have among myself and my team. For example, Chirag, if today I'm discussing a company A Limited, and we are debating कि इसकी growth 50% होएगी या 55% होएगी. We are not debating 50% or 20%, right? So at least you are saying that 50% growth is going to come in for sure. Now at that growth today, how many companies grow at those levels, right? And consistently. So maybe today as Rohit, I feel, maybe the stock is expensive. It is not fitting fully into my margin of safety criteria. But if I get my business call right, that 25%, 50% growth right, then maybe if I'm looking at 2 years down the line, maybe I do not overpay today. When you're debating on a high growth company and you're debating between 50 and 55, there's no debate. That 5% will not make a difference to you, right? But when it's you're debating a 15 and a 20% growth, then it's a debate. What are you paying for it? That's one. Secondly, what I look at it is, so when you buy a stock, as a fund manager's mind, what goes in your head? What will drive the returns, right? So yes, of course, the business growth is one part, which will, that will go, that will drive returns. Secondly is whether there will be a multiple expansion or it will be a compounder, right? So how I see it is, if I'm analyzing two companies today, company A, company B, both are going to give me maybe a 25% return, according to me, in next 1 year. So how do I choose between these two companies, right? Suppose in company A, the 25% return is a mixture of valuations getting upgraded and earnings coming in. And in company B, it's just earnings coming in. I'm not giving the benefit of doubt, the valuations will pick up. Then I will maybe, size them equally, or maybe company B will be higher, right? Because here I'm having two levers to play, valuation upside, which is not in my hand, and two, of course, business upside. But when the debate is of 10% and 35%, then there's no debate, right? What kind of upsides you're seeing. These are the two aspects I look at it, Chirag.
Like we were discussing right now, and in the past also you've spoken about, having conviction in undervalued stocks. So can you share a recent example where you doubled down on a stock or sector despite market skepticism?
I think last 6 months, I have really not doubled down on any stock. And I'll tell you why. See, it's a behavioral aspect, right? We as fund managers and advisors, right? We look at the last 12 months price and we say it's come down so much, right? So I believe there are two ways to look at a coin, right? Maybe 6 months down the line or 6 months back, the price which I was seeing and the valuation was I seeing, was it the right number? Or it was a euphoria, right? So today, if you tell me, Rohit, the stock is corrected from 40p to 30p, it become cheap. So my first intuitiveness is, and again, coming from the margin of 50, was a 40p a right number? Rohit, were you buying at 40p? Were you even thinking of buying at 40p? If you were not thinking, it was out of your radar. And in the last 6 months, yes, 40 has become 30, but even the earnings have been downgraded, right? Even the outlook has been deteriorated. So why just because the stock price coming down, why you want to add it? So when I was just, since you asked me this question, I was thinking last 6 months, have I doubled down any of my holdings? No. But at marginals, have I added little bit? Yes, I have added. But no stock has come, which I want to say, okay, I have a 2% weight, I want to make it 4% weight. I don't think I've seen, witnessed any stock like that.
So Rohit, you still believe there is still room of some more correction in the market to make the valuation very attractive?
See, I would say, see, talking about market and talking about stocks, I keep it in two different baskets, right? Because say if you're talking about Nifty, it's made of 50 stocks. Agar 5 stocks do very well, Nifty will be somewhere else, right? And I'll be somewhere else. So among my basket of stocks, what we own, right? As I said, uncertainty, volatility is going to be there. But if the business is strong, right, and even your NAV is going to go down if the markets fall the way they have fallen. But when things stabilize, how is the business model today? How are they placed vis-a-vis the peer? The things get back to normal, who will come out running? So I think that's the way I look at it, right? So yes, I mean, market correction, it's a two-edged sword, right? If 7 stocks in Nifty do well, we will not get the correction. But the rest 40 will show you the pain. The rest below that 250 stocks will show you the pain. So I keep that aside, the market view in terms of my stock picking. That is why I'm sure you must have heard, people argue about large cap, mid cap, small cap. For the last 1.5 years, I've been saying is I'm indifferent. If you're finding a value in a stock, if the business is good, you're paying the right price. If it was small cap or mid cap or large cap or what is the difference, right? You're buying the business, you're not buying the market cap for it. That would be my answer, Chirag.
Are there any overlooked or contrarian opportunities in the market right now?
I'm finding it difficult right now to find some, right? But I feel there is a lot of like in pockets of healthcare, financials, and energy. I think there are some pockets where there is value. And as a fund manager, you need to take that call in these times. If you don't buy them today, are you going to ever buy them? I think in these three sectors, there are some pockets of opportunity where even some stocks I feel, I mean, that's my personal view, they are maybe mispriced. And, as a fund manager, I should be adding them.
Moving on to a few fund-related questions. DSP ELSS, it has performed consistently since 2021. So can you share with us what's been behind its success?
If I look at my last 15 years of fund management history, right, I really haven't changed a lot in terms of the basic style or the connect, like understanding the business behavioral aspect. And maybe what's gone right is most of my calls have gone good for us, right, in terms of stock selection and sizing. And two, I've stayed away from news because if you see last 2 years specifically, right, there was so much of news flows, right? I mean, how do you decide at that point of time? Secondly, for a fund manager like me, like, who doesn't like to overpay. So there were times, when I sold off stock, I thought I've made a lot of money. रोज तूने बहुत अच्छा कर लिया है. And the stocks have gone up 20-30% above after my selling also, right? But that didn't make me change my philosophy or, how should I value a business? Should I look at differently, right? I think I stuck to the core belief of what I understand. And I think that's worked well for all my funds. Stock selections across the board, whether it's you're managing a ELSS, equity opportunity, DAF or NRNE, right? For me, they all 4 fingers are the same. So just stick to the core belief. I think that's what worked for me in the last 2.5, 3 years, Ruchira.
But Rohit, then how do you manage if you see the stock going up by 20, 30, 40% going up after you selling, then what what do you think about it then?
Of course, you feel bad. I mean, no doubt. I mean, there's no point me saying ki I don't feel bad. But why did you buy the stock, right? What went in it at that point of time? And why are you selling it, right? You think it's fairly valued. Why is it fairly valued, right? You think now the business growth can, plateau or come down. So there's a reason for it, right? And if you see, I mean, last 2 years, Chirag, it's easy for me to answer today, right? The stock price move up was more because of multiples re-rating. If I would say sold maybe 10 stocks in last 3 years, that's giving you an example, right?
Yeah.
I think out of 10, and if I remember, two stocks were the one where I got my earnings call wrong. I mean, earnings kept on surprising. But the rest, 7, 8 was valuation re-rating. और वो मेरे हाथ में नहीं है. At some point of time, I have to give it up. You know, I don't want to play through the market and say that when the time comes, I'll be able to sell it at the peak. I don't think I'll be able to do it. So
Okay.
that's how I see it, Chirag.
So Rohit, as you mentioned about the ELSS, even the DSP equity opportunities have seen strong performance in 23 and 24. What factors have contributed to this outperformance? Could you share with us any sector or the stock call which has gone right?
I think financials, healthcare, and government-owned energy companies, uh, telecom ancillary companies. I think these are the few sectors and businesses which come to my mind, which help me, get some performance over the last 2, 3 years. And again, these all calls were pure bottom up, right? And again, I'll give you an example, not naming companies, but how the thought process works. If you're seeing something going right in a particular industry, they're all tick marks, right? In terms of how the business is turning up for the company himself, herself, for the sector, or what are the government policies, how they're thinking about, right? So yes, that business will do well. But that business also, has certain ancillaries to it who support them, right? So if that business is going to do so well, even ancillary is going to have, a good runway per se. I think that helped me identify two names in the powers financiers, one name in the telecom ancillary. And of course, healthcare is a totally different subject. I think a combination of this worked well for both equity opportunity also and ELSS tax saver also.
Right now, since both the funds, they outperformed their peers, how did you manage the drawdowns while staying ahead?
Ruchira, I have not done anything different in the last few months, right? So I think what's worked for me is even I have had stocks in my portfolio which are down 25-30% in the last 6 months from the September 24 highs, right?
Mm.
But is the stock price change determining of focusing my behavior or my actions today? No. It is still the focus on the business. I think that's what has helped me, right? Because stock price, the volatility I cannot catch, and price is not everything. So again, just focusing on the business and saying, okay, I've gone wrong, the price corrected. Was it my fault? Was it market's fault? Or was it both? To take a call and move on. But from today or even 6 months back, 3 months back, what is the business today? How are you seeing it? How are you valuing it? Just focus on that. I think that's what I would say has worked well again.
Rohit, the last time when we met during the interview, the dynamic asset allocation fund was lagging in terms of performance, but since then it has recovered a bit. So, what contributed this turnaround? Because this fund is only 25. You invest 25% in the equity, and remaining 75% is in debt. So, could you just help me out?
So Chirag, first let me correct you.
Yeah.
The equity and debt allocation comes from a formula. So that 75-25 is not fixed, right? So the equity allocation is based on a formula. That's the first part. So as we stand today, the equity allocation as per the formula is about 40%, and 60% is into ARB and fixed income. That's the formula. I think what worked well for us in the fund, I would put it to two aspects. One is the whole construct of the fund, the formula, and few changes we made 15 months back, in terms of how the formula works, what kind of time frame the fund manager should be given to change according to the formula. And two, of course, what worked well for us in equity opportunity and ALS tax saver in terms of stock selection and why you own the stock. So there were a few changes we did about 15 months back, in terms of the timelines which the fund manager gets to change the portfolio if the model changes. Some kind of hedging which we can do instead of selling a stock. So again, just if you have time, I'll just try to explain it to you in 2 minutes.
Sure. Yeah.
Today, as a fund manager, when you buy a stock in a portfolio, you don't want to have it in your mind कि रोज 6 महीने बाद तुमको बेचना पड़ेगा अगर equity allocation कम हो गया, right? You want to buy the best stock. You want to make the effort. It may be a liquid stock. You may take pain in buying it or selling it, right? So what we try to do is in the new FSA, if today my equity allocation goes from 20, 30, 40, 50, 60, right? I'll build up my portfolio. But say, for example, it goes down from 40 to 20 for whatever reason, right? As a fund manager, I'll be not forced to sell my stocks. I can hedge my portfolio by buying Nifty puts. So what it does is, as a long only fund manager, when you're building a portfolio, you don't want to build portfolio 3 months, 1 month. Kabhi ye stock leta hu, 3 mahine ke liye, you don't want to do that. You can buy stocks with a longer term view. And if the allocation changes, you can hedge it by buying Nifty puts. So I think that aspect, and we were at, sub 30% allocation for, the last 12 months, if you see for most of the period, we had about 30% allocation. So the last fall helped us also. I don't want to put everything on me, okay, I did it. And of course, the rigor and the approach of other funds of mine, in terms of buying, selling stocks, it's same here. We have about 65-70% commonality in all the three portfolios. So now if you're thinking something for some fund, and if it matches in other categories also, you need to act accordingly. So that's the answer I would give you for DAF.
Okay. But any changes on the model side? Have you updated the model as you mentioned?
The model is the same price to book and price to earning model, and what percentile of valuations we are trading today. We have added the volatility factor to it, one, and two, as I said, hedging by buying puts. So again, this is more of operational reason, right? And the behavior of the fund manager. Today, I'm not thinking, maybe the earlier fund manager used to think, I'm buying it today, it becomes 30 ka 40. If tomorrow the market goes up, it will become 40 ka 30, I'll have to sell again. So should I just focus on buying liquid names, or what should I do? Today is again, should I focus on buying the best names, forget the market cap, right? And I think that's the difference.
Right now, coming to DSP Focus Fund, its overall performance has improved as reflected in the 3-year alpha. However, one thing that particularly stands out is that it has delivered a strong performance so far in 2025, ranking comfortably in the top 10 among the peers. So this coincides with a noticeable increase in cash allocation since August 2024, which now stands at 10.74%, higher than the category median. So what key decisions or shifts contributed to this strong performance? Was the higher cash allocation a tactical call?
So I would say Bhavan and the team have done a good job with our DSP Focus Fund for the last 2.5 years, right? I think, again, for me as a fund manager, and a focus fund manager, I cannot manage a focus fund. If you will tell me to manage a 20-25 stock portfolio, I cannot. But, it need to have certain kind of behavioral aspect to it also. So what Bhavan has been doing is, he has a strict thing in his head about expected returns, right? What is the implied return, at what price are you buying today? And then his sizing, right? So, and in terms of stock selection, I would say, touch wood, like, we had certain common stocks also. So we have got that 23, 24 number of stock selection right? In terms of sizing, that call of implied growth expectation, that also worked well for us over the last 2.5 years, right? I would not put it to so much of cash. Cash has been a recent phenomenon. If you see last 2-3 months, it's not been the last 6 months, right? We were not 12% cash in September last year. I would say one, the stock selection, sizing of the same, right? And cash has been more of a near-term last 2-3 months phenomena, right? Like I said, if you're not finding an idea, just because the stock prices come down, does it mean you buy something? I think that thing, even, we have, Bhavan and I, when we discuss, we talk about it. You take your markets will go up, we may take a pain for 1-2 days, 1 week, unless you're not sure of what you're buying, because he doesn't have a liberty to buy 35 stocks, 40 stocks, right? He has to stick at 28, 29, 30. So let's wait and watch. Let's get a good idea. And if you're able to do that, and if you lose out in this period, hopefully, when the things come back to normalcy, we'll take up. That's been with focus.
Rohit, with most top performing peers in 2025 have mid and small cap exposure of around 25%. DSP Focus has around 40% exposure. So what's your outlook on the mid and the small cap going forward? What gives you confidence to maintain such a high significant overweight relative to the category?
So Chirag, I would answer the question is your conviction on the stock names, right? And I'll suppose I'll give you a very simple, again, I'll try to give it an example, right? So in the last 15 months, we have been having this debate, right? Large cap, mid cap, small cap. So I, as a fund manager, you or someone as an advisor, right? Advises his client. The large cap seems to be the better off with his mid cap and small cap. So you should have incremental exposure to large cap funds, right? Fine, fair enough. It's a right observation because the valuations of the indexes is different, right? Now, I, if an advisor or I, as an investor, go and buy a large cap fund, which has got all expensive names. But that's because वो large cap में है. Are you and me doing the right thing, right? So again, in my head, it is if he is 45% in mid cap, small cap today, what is the business? What are we paying for it today? I think that's very important. That debate will always debate. We get debate from our sales team also. We have like what you rightly mentioned. We have slightly higher side on small cap, mid cap roles, where the other players, they have higher large cap sides. I said, don't bother about it. Because if I have the wrong names, I know I have the wrong names. But if I know why I'm buying a stock or owning it, I'm fine with it. So, we were thinking, I mean, to be fair with you, without, mincing words, 6 months back, 9 months back, we were thinking, Bhavin and I, should we move something to large cap, right? I mean, थोड़ा at the margin so that everyone feels good about it. My thought was the समझ में नहीं आ रहा है, right? Just because the narrative of the market is this, you want to go with the narrative or you want to do what you think is right for your unit holders. I think we decided on the second aspect.
Right now, how do you approach sector allocations and how much influence does the benchmark have on your decisions?
So, actually, I'm aware of my benchmark in terms of sectoral weights, right? So, but is that the driving factor? I would say at stock level, it is. And I'll tell you why. If today I'd like a business, I think, and it again takes mark all my investment philosophy, reasoning, thoughts, right or wrong, whatever you may say. And I decide to buy, I think, let me buy 5%. 5% is a good name, a good percentage. But अगर वो benchmark में 7% है, then what am I doing? Because even if I get my thesis right, my stock call right, the benchmark is going to do better than me because they have in the same stock a bigger weight, right? So at stock level, I do look at it if it's a decent size weight in the benchmark. And if I'm surely positive on it, I need to have, a big active weight to it. That was the point. On the flip side, there are a lot of big weights in the benchmark without naming them. I don't own, right? I spend more time in those names, right? Because you don't own them for a reason. Of course, and you agree with the reason. That's why you don't own them. Is something changing? It should not be out of sight, out of mind. That's how I look at it. But in names which are like smaller names in terms of smaller weights on a non-benchmark name, it's my conviction on the stock, impact cost both on the buying side and selling side, that drives the weight. I've had stocks, I don't mind buying even 50 basis points because the stock can give me a return of 30, 40%. That 50 basis points will give me 20 basis points return. So if I have a 2% weight in a stock, which goes up 10%, I'll get a 20 basis points. That's how I see the sizing aspect of it. Sector-wise, I'm aware of what weights they are, but is that a driving for a sector? No. For a stock, it is.
Rohit, now do you use the momentum indicators in the portfolio construction? If so, how do you blend them with the final fundamental analysis?
So Chirag, it is, I would say, in the last 2 years, I've been using it a little, but it is less than 5% of my proper investment decision, right? Because as I said, last 2, 3 years, everything has been going up, right? And if you look at it in the last, I would say, if you go back 3 months and you go back that, 15 months, so many momentum funds were launched or talked about, right? And when you go back in history, right? So yes, this category or this momentum investing has done well, right? I don't maybe do it, so I'm not talk. But if you look at that's the data telling you, right? So what I may be using it is, if I want to buy or sell a stock, I check with my team on the momentum indicators, right? कि अगर मुझे आज ये stock बेचना है, I have decided I want to get zero out of it, right? And the momentum screen is telling you, no, it's good, right? I slow down, I sell it, but I'm not an aggressive seller to it. So everyone is willing to buy, might as well let me try to make advantage. I may or may not be able to do it. So, I've been in the last 12 or 15 months or so, I've been watching it. I'm being aware, right? So every month end, I get a file for my RQA team, my quantity team, which stocks in my portfolio are momentum, low momentum, high momentum, growth value, right? So you're just aware because if this is how a lot of people are looking at it, at least I should not be blindsided. But that's only, I would say, 5 to 10% of my decision making. The core 90% is what I mentioned to you in the beginning.
Right now, one last question, Rohit. Post the correction, which sectors or themes do you find attractive and which ones do you think are overvalued now?
I think, so again, I like financials, healthcare, energy, and telecom. So that's the sector, right?
Yeah.
But even within these space, there are some names which I think they're overvalued, right? So I still feel today, I mean, if you would ask me, Rohit, just put it out, put a gun to my head. So when I compare it to the earnings expectations, or whereby, where you could see some, disappointment, I feel industrials and IT, maybe though the stocks have corrected, but maybe I have doubts in my head. So I do own industrials and IT. With benchmark, I'm underweight. But if you'll ask me, where are you fearing in your portfolio, right? These are two segments. The earnings don't match up even if your lower expectations, right? Then these two are my worries, and rest three I mentioned to you. But among them also there are stocks which are overly valued, right?
Great. Well, thanks, Rohit, for sharing those valuable insights and sparing time. It's been a pleasure talking to you.
Thank you. My pleasure. Thank you both. Thank you.